Alright, there's a few charts I'm going to show today, mainly oil, how it relates to the US dollar, and then tie those in a bit with the S&P 500. This is a chart of West Texas Intermediate crude oil, and this is last July up here, and then obviously current prices over here. And the principle I want to talk about on this and the chart of the US dollar is something I've talked about before on the blog, and it is kind of the idea of uniform type corrections in a trend, and then how you can recognize when a new trend is likely to have started. So if we look off the high here, you have this six month downtrend, and along the way you have some periods where the price of oil is able to advance. You have these little rallies, and they last however long. In this case, they're 4, 5, 6 days. And if we average the size of those rallies together, they're about 15%. This one down here was bigger than any of these ones, and it ended up being about 22, 23%. And then off of the low point down here around the new year, there was a advance that was much bigger and faster than any of these other ones, significantly so. It went about 42, 43% in a period of about 7 days. So at this point, around the top, maybe a day or so after, I had said on the blog that there was probably an intermediate term low in oil made here. And then a couple of days after that, as this correction got a little bit deep, I had said that this probably wasn't going to end up being a real strong directional advance. It was probably going to retest the low before moving higher, and I suggested it might form a flat pattern, something like that looks roughly like this. And then to look for it after that happens to to move upwards and to maybe top somewhere between that high and these highs up here. And that part actually, turned out to do pretty much exactly that. However, if this was a flat pattern, an A, B, C pattern here, the market should have gone down that way, and it didn't. So this whole pattern here is probably some type of a triangle or a more complex pattern. That's not really the point of the post, but I wanted to look at a couple things of why we maybe should be looking for a top in oil prices here any day now. One of those reasons is that you could view this as a head and shoulders bottom, where you have a shoulder, a neckline, a head, and another shoulder. And the standard way to get a price target for a pattern like that is to take the gain from the head to the neckline, and which in this case is almost exactly 50%, and then project that up from the breakout point of the neckline, which is here around $46. So if we just take 40 or 50% of $46, that's about $23. Add that to 46, and that puts us about $69, which is almost exactly where price is right now. So based off of that price target for head and shoulders pattern, that's one reason to look for a potential top here. Another reason is what I'm going to show next, which is a put-call volume data chart. This is Schaefer's research, and this chart here is the blue line is the put-call volume ratio for USO, which is the primary ETF used to mirror the oil market. It doesn't exactly mirror it, primarily because some of the fund is held in natural gas futures contracts, so that will influence the price as well. In this case, the chart, the red line is the price of USO, so you could think of it as the price of oil, and then the blue line is that put-call ratio. It works the same way that put-call ratios do with stocks in general, is that when you see a big spike up in the put volume, that'll tend to correspond with a low point in the market. And whenever you see the put-call volume drop, that'll tend to correspond with a high in the market. So we saw that here, which wasn't a major price peak, but oil did drop after that. Again, we saw a big drop here right near this peak, and then we've seen this real big decline in put call volume the last month or so, and as prices have risen. So there's indication there's not a real rush for protection on put protection on this fund, not a lot of pessimism. So that's a contrarian reason that we should be looking potentially for some degree of a topping in the prices of oil. Now, this is a chart of the US dollar index, and this is a monthly chart, so each one of these candlesticks is 1 month. This data goes all the way back to 1999, and then current prices over here. And you can see in 2001, there was a major high made in the US dollar index. And then we have this multi-year bear market. On that way down, I'm going to kind of illustrate the same principle as with the chart of oil. You have these little advances the whole way down. A lot of them are similar in price and time. And this one, there's a little bit bigger one. However, it did give way to new bear market lows. However, in the middle of last year, we saw this real explosive advance in the dollar, which was bigger on a percent basis than any of these other advances, and it was much faster. So it was a very explosive advance, and you could pretty much conclude, even at this time frame, at this point in time, that a new trend had begun, or at least this downtrend had probably ended, much like that intermediate term low in oil. Now, what would happen from this point? There's only a few standard patterns to probably expect. Flats, a zigzag, a triangle. In this case, after this initial decline off the top, there was an advance making almost a double top, suggesting this is probably going to be a flat pattern, an A, B, and then a C pattern. In that case, the C leg should end somewhere near the low of this A wave. So from this standpoint, we're right in that range now, and I think we're entering a pretty narrow window, especially if you zoom this down to a daily chart. We're probably entering a time where any day now the dollar could be making a significant bottom. Now, I know as far as the media goes, there's all the talk right now is about inflation coming back and the dollar dropping and gold prices rising, all this stuff, but that's pretty much always going to be the case at major turns. Is you're going to have this public sentiment that is kind of late to the party. So from this chart, I would expect the dollar to actually rise through the rest of this year, maybe even above these old highs. So that'll be something to watch for. Now, to tie that into the stock market, I mentioned this a little bit in a post a couple days ago. Bottoms in the dollar have tended in the last few years to correspond with tops in the stock market. So we're looking for potentially an intermediate term bottom in the dollar value right now. At the same time, we're looking for a top in the value of stocks. Also looking at a top in oil, which has correlated pretty strongly with the S&P 500 on the advance since March. So the indication, from my perspective, is if this makes a bottom, these other ones are maybe more likely to make a top. Now, this is a chart I had made a couple weeks ago, May 15th, talking about potentially looking for a top in the S&P 500, and I said this might end up being something like a complex correction where you have like an A, B, C, and then what's called an X wave, and then another A, B, C. As of a few days ago, the end of last week, I thought if this was a A and this was a B down here, we might be getting a flat pattern for C, and it might not actually make a new high. However, today we obviously broke that high, so this scenario from this chart is still kind of the main perspective and that I'm coming from on the S&P 500. I think the 955 level, there's a number of things there. On the chart of SPY, there's an unfilled gap here. There's some other kind of relations between wave A and C that would indicate that might be a resistance zone. In either case, we're at June 1st today. I would expect, and probably this week to have a significant top made in the S&P 500. The pattern is getting to that point where I think we're narrowing down the possibilities here. If that does happen, then we're probably going to see a pretty violent decline begin right after that. Typically, you'd have a decline that wipes out the last leg up in less time than it took to form. So that's something to watch for in the next couple weeks. As that unfolds, hopefully I'll get some other updates on the specifics of it, but that's all for today's update.